Hey, what's up guys? Welcome back to the channel and I hope you're all doing well. In this video, I'm going to go over my portfolio, talk about the performance in May, and the trades I'll be making in June. If you're new to the channel or you've seen my content before, do me one huge favor, hit that like and subscribe button. That lets me know to produce more content like this and you don't miss out on any future videos like my portfolio updates. Let's start off directly with the summary tab and I'll walk you through some of my holdings. The first one I want to talk about is AQN, Algonquin Power and Utilities. And if you don't know AQN, it's a regulated utility and renewable energy company with assets across North America. The 5-year dividend growth rate for AQN is around 9 to 10%. With AQN, I'm currently down about 6%, and it makes up about 2% of my portfolio. And currently I'm at a 4.13% yield. Even though I'm down in this holding, it has gone up 60% in the last 5 years. And the company expects to grow its earnings between 8 to 10% on an annual basis. It's a stable growing business. For me, this is a buy and hold forever dividend stock. I'll definitely be picking up more shares in June to average down my cost, increase my yield, and increase my dividends. The next holding I'll talk about is ATD Couche-Tard. ATD has been a great holding for me. I'm up 6%. I've earned 9 cents in dividends, and it makes up 3% of my portfolio. I have a yield of just under 1%. They have a low 3-year payout ratio, and 90% of the profits are being invested right back into the business. They have been paying solid dividends for the last 10 years. The company is committed to sharing its profits with the shareholders. To me, this is another strong buy and hold stock, and I'll likely pick up more shares when the opportunity presents itself. Taking a look at Brookfield Asset Management, BAM. BAM is an alternative asset management company. They focus on direct investments in real estate, renewable power, infrastructure, credit, and private equity. I have 19 shares. My book value is above $1,000. I'm up over 7% on this holding. I haven't collected any dividends yet. They should be coming in soon. And this one makes up 4% of my overall portfolio with a yield of 1.14%. Just by owning this one stock, you're owning a piece of a very diversified portfolio of assets across the globe. Brookfield Asset Management is a natural diversifier to any portfolio. They buy assets on the cheap and they harvest those assets at a premium. This strategy has worked with them for the last few years, and I'm sure going forward it will continue to work for them. And along the way, they'll be sharing those profits with their shareholders through dividends and dividend growth. So I can definitely see myself picking up more shares of BAM. Let's talk about BMO. I'm up a whopping 10% in BMO, and I haven't even been invested in them for that long. I've collected $6.36 in dividends so far. It makes up 6% of my overall portfolio, and I have a yield of 3.7%. BMO, TD, Royal Bank, these are some of the largest multinational banks in Canada. All these major banks had strong earnings recently, and they're flush with cash. As these banks have continued to grow, the dividends have been frozen because of regulations due to the pandemic. But once these regulations are lifted, there are going to be some monster dividend raises coming your way. You can expect a major boost to your dividend income from this group. In terms of picking up more shares for BMO, I'm on the fence. One, because it's already at 6% of my overall portfolio. And the second reason is that my book value per share is at $115, and the current price is around $126. That means I would have to pay a difference of $11.69 just to pick up more shares. But on the flip side, you really can't go wrong with the banks. They pay out great dividends, they're stable, they're large, and they're going to continue paying dividends for the foreseeable future. So my question is, do I want to pick up more shares of these banks at a higher valuation? Let me know your thoughts in the comments. Are you picking up more of these banks? And if so, which ones? It's not just BMO where I've seen amazing growth. I've also seen it with Royal Bank. I'm up 6.5% on Royal Bank, also 6% of my portfolio, and I have a yield of 3.67%. So this is where it's interesting with TD. I'm only up 3.57%, makes up 6% of my portfolio, and I have a yield of 3.8%. So with all three banks, I have roughly the same yield, and they all make up 6% of my portfolio. But my major winner has been BMO. The growth has been stronger than Royal Bank and much stronger than TD so far. So I'm looking to see how this trend continues in the next few months. Now, it hasn't been all roses and green for my portfolio. If I show you my Bitcoin ETF, you'll see that I'm down 22%. I have a book value of $173. My market value is down to $135. And same thing with the Ethereum ETF. I'm down 16%. Combined, they only make 1% of my portfolio, so those losses aren't a huge deal. But it's really interesting to follow their volatility. They had a great run up in 2021 and then a major tumble from about April and onwards. If you don't want to hold crypto directly, holding on to an ETF that tracks Bitcoin or tracks Ethereum is a great way to get that exposure. The other thing is that because they've gone through a major price correction in the last little while, if you have been wanting to get in on Bitcoin, Ethereum, either directly or through an ETF, this could be your buying opportunity because of a deep discount in prices right now. So both the Bitcoin ETF and the Ethereum ETF, I'll likely be picking up more shares just to average down my holdings. Over the last 10 years, Bitcoin and other crypto have gone through a few cycles. They seem to climb really high, and there's that steep drop, and then for the next few years, they sort of stagnate along until you have that pickup again. So we'll see where we are in the cycle. But either way, I'm down 20% and 16%, so I'll probably be picking up more shares. Another holding I want to talk about is Dream. I only have 2 shares in my portfolio, and I'm up 6.36% on this holding. Honestly, I kind of wish I had picked up more shares when I initially opened up this position. Dream is a provider of real estate asset management and advisory services. They have real estate investments across the globe, so they're very diversified. They have a market cap of over $1 billion and a yield just over 1%. Dream expects to generate more recurring revenue in the near future as their development properties are completed. This should lead to growth in both earnings and dividends. Honestly speaking, I wish I'd picked up more shares of Dream, but again, hindsight is 2020. It could have gone down, it could have gone either way. But if there is an opportunity, I definitely want to hold more than 2 shares because right now, my yield is at 1.2% for this holding. I'm only collecting like 7 cents per share on dividends. Actually, before we go further, another stock I want to talk about is Telus. And I'm sure you've already heard of Telus. It's a national telecom company. It has products and services including internet access, voice, entertainment, healthcare, video, and IPTV. To me, Telus is a perfect dividend growth stock. It's no surprise that the telecom industry in Canada is an oligopoly. New entrants get bought out by the big players, assuming they're able to enter the market in the first place. My yield on Telus is just under 5% and makes up only 2% of my portfolio, so this is another target where I'd like to own more shares of Telus. Telus is going to be one of the 5G leaders as the technology rolls out, and fiber optic is also going to be another booming business for Telus, not to mention his exposure to telehealth. Overall, May has been a pretty good month so far. I have 641 shares. The value of the portfolio is just under $32,000. I have an open gain of $338, which is a return of 1%. I've collected $18 in dividends, so my total gain is $357, meaning 1.14%. And overall, my portfolio yield is at 2.97%. And I'm okay with the yield so far because it's not high, where I'm fearing dividend cuts, and it's not too low, where I'm barely making anything through dividends. Now, before we go into my dividend income, I get asked this quite often. If you are interested in using this spreadsheet to track your portfolio just the way I do, there is a link in the description so you can download a copy for yourself. And then you can use this spreadsheet to track your own portfolio. Putting these videos together takes time. So it's actually quicker for me to write up my thoughts and tell you about my trades as they happen instead. I'll still be putting these videos together, but if you're interested in keeping up with my trades in real time, you have that option as well. Again, link in the description. So that's my portfolio holdings in a nutshell. Let's take a deeper look into my dividend income. Taking a look at my total dividend income for the month of May, I earned a grand total of $74.97. And this dividend income was from 17 different companies, the largest of which is Enbridge, and the smallest of which is SIS Savaria at 4 cents. Here's another interesting way that I look at my dividends. In May, you have 21 work days. Assuming you work 8 hours in those 21 work days, that gives you 168 work hours. $74.97. Divide that by 168. That gives you a working wage of 44 cents per hour. So that means my portfolio earned a working wage of 44 cents per hour throughout the month of May. It's not a whole lot, but the cool part is I don't have to physically do anything. These dividends just show up in my account day in, day out, without me actively having to work for them. And that's why I love dividend investing, because this income shows up in your account and you don't have to actively do anything. Sure, you have to spend time researching these companies and making your investments, but once you've done that initial work, the rest is the easy part. Just sit back, collect your dividends. And if you're a dividend growth investor, you should be collecting more and more dividends as these companies continue to grow. So whereas a salaried person might only collect 2 paychecks a month, if you're a dividend investor and you have all these companies, you're collecting multiple paychecks throughout the month. And to me, that's really cool. So that's my dividend income in May. If I fast forward to June, I'm looking at $100.50. So that means June will be my first month where I earn $100 in a single month just by dividends. And this amount should grow as I make more investments. So that was the dividend income I actually earned based on the ex-dividend date. This chart right here This shows me the actual dividend that hit my account in the month of May. These are the actual cash dividends that actually showed up in my account. So throughout the month of May, $19.48 were actually deposited into my account. So that's my dividend income in a nutshell. Looking at my market value pie, you can see that right off the bat, VGG, BMO, and Royal Bank are my top 3 largest holdings. And the Bitcoin and Ethereum ETFs, they're my smallest holdings. And everything else sort of falls somewhere else between the spectrum. Taking a look at this gain or loss chart, I have a total gain of $338. So the cool thing about this waterfall chart shows you all the increases, all the decreases, and how they add up for your total gain or loss. And finally, and comparing May to the last month, April, I'm up 255% in market value between May and April. Majority of that came from my contribution. My total gain is $357, which is a 1% total return. So that concludes my portfolio summary. It's been a great month in May. It's a lot of greens, a lot of buying opportunities, and I'm excited to see what June has to offer. And the best part of being a dividend investor is watching your dividend income snowball and grow. Because with dividends, you have the option. You can spend it however you want, or you can reinvest it. The option is yours. Thank you so much for watching. This channel would not exist without your love and support. So please do me one favor. Check out the links in the description of this video. I have links to various discounts and sign-up bonuses. Every click directly helps support the channel. If you have questions for me, feedback on this video, or maybe you have ideas on future content, let me know in the comments. And while you're at it, make sure you hit that like and subscribe button. That's it for now. I'll catch you guys in the comments.